Good afternoon and welcome this afternoon to Market Movers, another great webcast from Schwab Coaching. And there's the bell, and that means the week is closed. We're going to talk a little bit about that today. Welcome to all of you that are joining us here in the live version. Welcome to everybody that might be joining us in the recorded version. And of course, welcome to my good friend Brent Moores, who is out there in the chat helping out. Brent's 20 plus year veteran of the financial markets. He's going to be there to help answer questions along the way and share this afternoon, Friday afternoon, Market Movers experience with all of you. And as we get started here, a couple of things to think about. It's been kind of an interesting week in the market. I've been doing a lot of traveling. If some of you have seen me in some of our live events, I normally will teach this Market Movers webcast, although I've got a whole host of great backups, Brent Moores included, James Boyd certainly, who kicked things off here at the start of the year. So my intent behind this particular class, this particular discussion, is much like it always has been in this particular point of the market on a Friday afternoon, is just kind of summarize what's gone on and take a look at what's going on for the next week and have a great place to kind of unwind and discuss and chat about what has been going on and what is going on in the market. This is a legacy from long, long ago. In fact, going back all the way into 2007, 2008, we started a little webcast called the Wall Street Wrap Up. And it was an hour long, a little bit longer than this session. And the first couple of events came really in September of 2008 is when we really launched it. And it was because there was a lot going on in the market, if you remember back in those days. And we started talking about things that were happening, news events, and that became the Wall Street Wrap-Up, which ran for nearly 10 years. Every Friday afternoon, we did the Wall Street Wrap-Up. And so it was a great time and experience. And this is the legacy from that, really kind of the same perspective. So hopefully, if you were familiar with that event and that webcast and you've been jumping into these market movers, that's my intent behind this particular class. So as we get started in this, thanks for letting me reminisce a little bit and kind of walk back through the years. But a couple of quick reminders. Everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any individual security or specific strategy or anything else. As we talk about these things, these are selected randomly based on what has been going on. We're going to talk a little bit about options in this discussion. Remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before trading and considering any option transaction. Of course, spread trading must be done in a margin account. Multiple leg option strategies will involve multiple transaction costs. Remember that short options of American-style options can be exercised at any time up to and including expiration, whether they're in the money, at the money, out of the money, which means if you're short an option, there's the potential to be assigned early. We're going to be using the desktop software platform from Thinkorswim, specifically the paper money version. It's a great learning environment. It's a great sandbox to practice in. It's not a guarantee of what might happen in the future. Of course, nothing is, right? Past performance, no guarantee of future results. We're going to use a lot of technical analysis in this discussion. We're going to talk a lot of macro ideas as well, but Schwab doesn't recommend the use of technical analysis or any any other individual means of market analysis as a sole means of investment research. Remember that investing involves risk, including the loss of principal. We're going to talk potentially about stops along the way. I'll point out some of the specific risks and considerations with stop orders, but remember they don't guarantee the execution price, just allow us to specify an activation price. So kind of a rough agenda in this discussion. What's the general trend of the market over the course of the last week? What moved the market this last week? How might that have impacted portfolios? And this will be kind of a free-flowing and wide-ranging discussion, especially on some data-heavy weeks like we've had today and this week. and what we might have next week as we get ready for the long week or the long weekend, and then the holiday shortened week of trading ahead. So some things to pay attention to. And as we do that, I'm going to go ahead and I'm going to switch over to the Thinkorswim desktop software platform. Brent's already reminded you of this, but I'm going to remind you again, click on that subscribe button if you haven't done so already. That's going to keep you connected to the Trader Talks webcast channel, to all of these webcasts, to all of this great content. And it makes it easier for you to find it. It makes it easier for other people to find the content. And it's probably the cheapest subscription that you're going to find for any kind of content service. It's free. So we hope that you will click on that subscribe button as well. Let's take a look. Let's start kind of our roam around the markets here with a look at the S&P 500, not only on today's closing basis, but also what it's been doing over the course of the last week, which has really been kind of interesting. So I will tell you this. I started the week. We finished up a live workshop, Technical Analysis and Option Strategies, in San Diego on Friday and Saturday of last week. And then I spent Sunday in San Diego doing a little whale watching with my family. And then we spent Monday of this week on the beach in La Jolla, and then we drove back here to Utah. So started the week on a nice warm beach, ending the week with a little bit of snow falling down outside. So that's not a bad thing to have happen. But taking a look at what's been going on in the market, it seems like the market kind of started surfing right around this 50-period moving average earlier in the week, crashed below that, maybe onto some of the rocks, and now seems to be making a little bit of a rally. In fact, today made this little bit of a breakout out of a diagonal downtrend line. I talked a little bit about this on Wednesday in my index options webcast. We were looking for that break to the upside here and that break the 50-period moving average. I'm going to zoom in on this last couple of month time frame on this 1-year chart, and we'll take a look at what's going on. So here we are on kind of the start of the week, if you will. There's the Monday, and kind of surfing off of that 50-period moving average, bouncing up off of the bottom of this diagonal downtrend line. We get a little bit of a rally, a little bit of a rally, a little bit of a rally, and then banging its head. Oh, yep. Let's see if we can do that. Yeah, see if we can stretch that out a little bit, and let's move that down. We'll zoom up into this range right there and see if you can see that a little bit better. There we go. That's a little bit better. All right, so taking a look at what's going on in this last little bit of movement, knocking its head, the SPX, into that 50-period moving average, and then finally breaking today. In fact, the 6,000 level kind of becoming the resistance area. If we were to draw that in kind of from a horizontal standpoint, right there, kind of running into that horizontal resistance at the 6,000 and a little bit of a test higher. So we get a bit of a doji candle today, but we've got some pretty strong RSI, or relative strength, movement to the upside, giving us the idea that maybe there's some momentum gaining here. So along the course of the week, and we'll talk about this as kind of a broad perspective, we had a couple of data points. We had CPI and PPI numbers that were a little bit cooler, and we'll look at where they were relative to expectations here in just a second. But that seemed to have moved the market kind of off of that rock bottom and back up towards this rally. So we had a pretty good rally. I mean, if we were to draw this line to line here, about a almost 4% rally from the bottom of that range up to where we ended up today. So a pretty good move. 2.91%, we see that right up here in the top. We can draw the line and kind of see where it is as well. Just about 3%, almost 4% move to the upside. If we take a look at the the NASDAQ, we can kind of see the same thing. I'm going to zoom in here once again. I'm going to just draw this line and kind of carry that down. And I would argue that we probably broke that diagonal trend line, although we ended up on a little bit of a red candle. We were already above the 50-period moving average on the NASDAQ, so tech-heavy names coming off of the Consumer Electronics Show, coming off of some of those late earnings announcements, now starting to see these rallies a little bit to the upside. And so we now see this, again, breakout of what was kind of a symmetrical squeeze in the RSI. So we got some momentum going as well. And let's take a look at the next move to the upside here in the Russell 2000. This is the one that's kind of confounded, I think, a lot of traders, because the small caps generally have been, relatively interest rate sensitive. We can look at that overlay here in just a second, but this is also where we see some of the influence of some rotation earlier last year, back in the June timeframe. The Russell 2000 rotated to a higher concentration of technology stocks, which kind of created this upward movement. We saw some pretty strong upward trending following that end of June timeframe in the market, because the big movers were generally those technology names. That was driving this small cap index as well, because it was now more sensitive to those movers, kind of bringing that halo along. And so we see that upward movement. Since then, that's been kind of a double-edged sword, and especially in recent terms, as rates have been going higher, the Russell typically is tending to go a little bit lower, and it's been banging its head into this resistance around that 2278 level, right? And that 2278 level has now been a resistance that's been tested once, twice, three times. I'll call it three times, just for the sake of the musical reference here. Once, twice, three times a resistance, and it's not breaking out yet. It's running into that resistance level. And this is kind of an interesting pattern that I saw developing over the course of this week. This is almost, to be fair, what it is kind of a skewed double bottom type of pattern, right? So we have a low, rallies up to an apex. We have another low, which is a little bit lower, and then it rallies back up towards that range again. But it almost looks as if it's kind of this almost broadening pattern, almost a widening out type of pattern, or maybe a reverse ascending triangle. Normally we see an ascending triangle looking kind of like this line here, but we've kind of seen this widening out of that, which would suggest that buyers are stepping in at lower prices, but they're pushing it up to higher prices. That may be one of the reasons why we're not seeing enough of a push to the upside to get out of that resistance level. Because you think about this, and I'll just draw this with my magic marker, and I think this is a good point to talk about here, is that typically when we tend to see a confluence between resistance, and I'm going to put an R on here, that's resistance, and support, what that means is buyers are generally, when we see that type of confluence, buyers are generally gaining strength, right? They're buying at higher and higher prices. They're willing to step in at higher and higher prices. On this particular level, in this type of triangle, buyers are stepping in here, and then they're letting it get sold back off down to here before they step back in and buy. And then they've got selling pressure that's meeting them up here at this resistance level. So that may suggest that buyers aren't willing to step in to those higher prices quite yet until they get a break. So we may see this just continue to kind of move sideways here in the Russell 2000. Now, here's the other thing to think about. And I'm going to put on this particular chart for just a second. We're going to put on here a comparison chart. So I'm going to come over here. I can do it two ways. I can click on the Flask icon, or I can go to Studies. And on Studies, I can do this. I can just add a study really quickly, and I can come down here to a comparison chart, and I can add a comparison. And what I'm going to compare this to, if I click on Custom Symbol, is /10Y, which is the futures market for the 10-year interest rate. So this is going to be reflective of that 10-year yield, not the bond price, but this is the yield. This is the Treasury yield. And if I click on OK, now we see that that comparison line here in this particular case. So we can see what yields were doing as this was kind of widening out. And yields were rising. And we've seen kind of that stickiness of yields. They've been rising on a general basis as bond prices have been falling, yields rise. We've seen yields fall a little bit, and that started this very strong rally of the small caps off of that 200-period moving average. Bond yields started to fall again. That gave us that lift. Now we see a little bit of a turnaround, and that's kind of what's holding this in stasis right at that resistance level. So here's kind of the thing that's challenging in this sense, because the Russell 2000 is interest rate sensitive, perhaps even more so than the S&P 500 and more of an inverse correlation. If we see these rates rise again and continue to rise into next week, then there's the possibility that we could see one more or two more or even more of these oscillations and transverses between this resistance level and maybe that falling support, or even the 200-period moving average as a potential support level. So what does that mean for us, right? Well, so think about this from the context of a portfolio that might be small cap heavy. Let's say somebody's got a portfolio that's got lots of regional banks or lots of small cap industrials or even small cap technology stocks that have been rocking and rolling because of some kind of connection to AI, but are now benefiting or now potentially suffering from challenges because of those rates. So that being the case, this might be something to pay attention to, right? And TNX, so yes, Joe, TNX would be a reflection of the, and you have to use TNX colon CGI to get that TNX, but TNX would be a reflection of the rate as well, or the yield. I'm using this futures market, the /10Y, because it gives us a nice continuous line here, and it's easy to display and compare. So same thing, right? We're not looking at trading this futures market. We're looking at this as an indicator, right? And if we were to put on here, if we were to change that, for instance, to /2YY, that would be the 2-year rate. And we can click on apply and okay. And now we're seeing that this is lots less sensitive to 2-year rates. So the small cap's not necessarily as sensitive to the movement of the 2 years as they are to the 10-year. We'll go ahead and we'll take that off. I'm going to go ahead and click on the Flask icon, and we'll take that comparison line off just so that we can see that. And you can kind of see what's going on here. We're going to come back to this as perhaps the subject of a potential trade example as we kind of wrap things up here. But I wanted to go really quickly to the Market Watch tab here, and I wanted to do a couple of things on the Market Watch tab. I want to look at the Visualize sub tab, and I wanted to look at the S&P 500 and kind of see what the day ended up with. And it was a pretty strong up day, right? We saw a gap to the upside. We saw some strength coming out of information technology. We saw some strength coming out of communication services. We saw some strength coming out of consumer discretionary with Amazon making a move and Tesla making a move. We even saw consumer staples with Costco making a move. We saw real estate and materials down here in this space, energy on the move. Healthcare was kind of the area, though, where there was maybe a little bit of movement back in the opposite direction. We see some of those red blocks indicating downward movement. Of note, given the fact that we're now kind of a week removed from the bulk of the fires in California, although still a terrible situation there and not under control by any means. But if you come down here into the financials and specifically the insurance subgroup, you see some of the insurers: Chubb, Progressive, Travelers, Allstate, some of the reinsurers, Hartford and others, really getting hit hard over the course of this weekend, really getting hit over the course of today because of those potential mounting losses. So it's something to pay attention to going forward as well. I'm sure we have not seen the end of this particular story in the insurance space, but the financials overall, we've seen a couple of bank earnings that have been pretty good to the upside, at least. JP Morgan, for instance, Wells Fargo had a pretty solid move as well on an earnings announcement. We'll talk about those earnings announcements here in just a minute. But this kind of gives us a sense of what's going on. Now, the other place that I want to go here under the Market Watch tab while we are here is right here to the calendar. And the calendar is going to be a good friend to us here in this particular class, simply because it gives us a sense of what's going on, not only in the past, but also what is likely coming up. And we have some choices about what we can display here on the calendar. I'm displaying the entire month of January. The problem with this is as those Econo Day events happen, they fall off the calendar. So we have a good idea of what's going on next week, right? PPI, we've got CPI numbers again. We've got, leading indicators. We've got retail sales. We've got some jobless claims numbers. We've got composite flash numbers as well. And so, that's kind of giving us that look forward. And we'll dig down a little bit deeper into that. I want to answer Joe's question really quickly about Berk B doing well. Berk B, yes, has a lot of insurance exposure. Berk B also has a lot of diversification. So even if the insurance exposure in Berk B may be a drag, there are other areas, especially consumer staples and others, and even some technology that are doing well. So something to think about in terms of diversification is that sometimes diversification is a double-edged sword. But here on this calendar, we can also see the earnings announcements that are coming up for the next week. We can see the earnings that have come up for the last week and have been in play over the course of the last week. We saw Goldman Sachs, JP Morgan, Wells Fargo. Early in the week, we saw a lot of those banking stocks. We saw some of the other financials, BlackRock. We saw Taiwan Semiconductor coming out with some pretty solid earnings on Wednesday as well. So some pretty good ideas here and that look forward. Now, here's where we're going to go next. We're going to jump out of the Thinkorswim ecosystem for just a moment. We're going to jump back to Schwab.com. And I'm on Schwab.com, and I'm at the Research tab up at the top of the page, and I'm under Research Tools, and I'm on the calendar on Research Tools, because I find that this calendar may be a little bit more helpful, especially from the economic event standpoint, from the look back as well as a look forward perspective. So we're here in this current week just to kind of get a sense of what moved the market this week. And we can see what the actual numbers came in at and what those numbers were, the prior numbers were and what the expectations were. So we saw things like core CPI, core PPI. So PPI numbers a little bit softer than expected. Again, that's kind of what led to the market lifting a little bit. We saw CPI numbers growing, but not quite as strong as the expectation. We saw crude inventories that got a little bit higher draw. We'll talk about energy in just a minute. Scroll down through this list. We saw natural gas inventories that just got slammed. I mean, they sucked down the natural gas, but a lot of that is a function of how cold it has been. For those of you in the Eastern Seaboard and the Midwest, you know how cold it's been. Big draw on natural gas inventories compared to the previous week. So a pretty big hit. We saw natural gas prices going up. We see things like the housing market index, which is an indicator of strength in the housing market, a little bit stronger than forecast and just a bit better or a bit stronger than the prior number. Retail sales numbers were off a little bit. And that's reflective of the holiday season and kind of finalizing the holiday season. And then we look at today's numbers. We see industrial production, which was quite a bit higher than expected. We see housing starts that came in better than expected. And again, that's strengthening, an indication potentially of strengthening the housing market. Building permits were a little bit off of prior numbers, but they were ahead of what was forecast. So, you take the good and you take the bad here. I mean, this is kind of a mixed week. Now, one of the other reasons why I like this particular calendar is if we go to next week, and we know that next week is a holiday shortened week, right? Market is closed on Monday for Martin Luther King Day, and no economic events coming out on Tuesday simply because of the delay typically from that holiday. But next week, Wednesday, we have crude oil inventories expected. I mean, this is the prior draw on the inventories. We've got leading indicators, which are being forecast to be down a little bit. Again, kind of giving some idea that there's some softness, but not terrible softness in the market. We've got continuing job claims. We've got initial claims, which are expected to stay roughly steady at about that 200,000 range, give or take a little bit. And then we've got flash PPI and flash sentiment. We've got that coming up. Both of those are going to be looking at kind of that expansion versus contraction in the overall economy. So we've got some economic indicators coming up next week that may be important to pay attention to. So again, just to reiterate where we get this calendar, this is on schwab.com on the research tab, and then under research tools, the calendar. And the cool thing is you can put this on here for earnings as well, and you can see the earnings announcements and what those expectations were. Healthcare space, right? Let's see if we can catch up. Okay. 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 I'm just typing in chat here. I'll blame it on YouTube because I think that's where it's coming from. All right. All right. So guys, thanks. Looks like we're back. So we were talking about the earnings that are coming up this next week. We've got Johnson & Johnson. We've got Procter & Gamble in the consumer space, also in the healthcare space. We've got Travelers in the insurance space. We've got small cap banks. We've got a lot of regional banks coming up next week as well. Some energy stocks. We've got some construction stocks that are coming up. And then getting into next Thursday, we've got some of the airlines. United Airlines, we've got American Airlines that are coming up. We've got GE, their aeronautics division. That's GE right there, and that's goes along with Union Pacific in the transportation space. So it is going to be a pretty full earnings week next week, but that's going to give us kind of a broad cross section of the market. In terms of what things are doing and where those expectations are coming in. So one of the things to pay attention to may very well be the guidance coming out of. So I'll give you an idea. Delta Airlines reported a couple of weeks ago, and their guidance was for Q1 of 2025 to be almost double what revenue was in Q4 of 2024. So you've got some guidance numbers that are coming out pretty strong, and that may be an indication of where there is some area that is driving the market. Certainly, those earnings announcements are one of those things that changes the market's perspective. So we've got earnings, we've got news. Let's take a look at a couple of other things that might be of 2024. So you've got some guidance numbers that are coming out pretty strong, and that may be an indication of where there is some area that is driving the market. Certainly, those earnings announcements are one of those things that changes the market's perspective. So we've got earnings, we've got news. Let's take a look at a couple of other things that might be moving this market. I want to shift back over here, and I want to look at a couple of other grids that I've got in my little stack of grids here. First of all, I want to take a look at our VIX grid. I want to get a sense of what's going on in volatility in the market. And this is VIX versus VVIX, or the volatility of VIX. So VIX, the implied volatility index of the S&P 100, really giving us kind of this perspective of, if you want to think about it from the standpoint of fear in the market versus expectation or anticipation. And we've got VVIX, which is the volatility of VIX. So volatility of VIX is growing, but that can work to the downside as well. So if we were to just take a look at the VIX itself, we saw the VIX move over the course of this last week and bleed off pretty strongly to the downside, breaking below its average, in fact, breaking a little bit lower today, but staying somewhat elevated to where it has been over the course of the last couple of months. And if we look at the correlation between the VIX and the SPX, now you can kind of see that inverse correlation. I've got, in fact, a correlation indicator here and a correlation study, and you can see that correlation is back to being almost an absolute inverse relationship. It sometimes changes, but when the market's moving higher, typically the VIX moves lower. When the market moves lower, typically the VIX moves higher, and that's kind of the relationship here. So the other thing that I wanted to take a look at while we're in the grids here is I wanted to look at this yield comparison to the SPX. We talked a little bit about the 10-year as it relates to the small caps, right, to the Russell 2000. Now taking a look at the SPX. This is the S&P 500 relative to that 10-year interest rate. And that 10-year rate with that little hook here to the upside today, you can see we kind of push again back down to that almost inverse correlation. Now, this one gets out of whack a little bit sometimes, but more often than not, typically tends to stay below that positive correlation, right? There's very few times, and it doesn't stay that way for very long, where there's some kind of positive correlation where rates are rising and the market's rising as well, right? You see these little blips above the zero line in this correlation study. But right now, they're almost kind of in opposition. So rates moving down, SPX moving up, rates tick back up when we get a little bit of stall in the SPX. So kind of in that sense, it's kind of coming to this confluence, but with some oppositional relationship here. And if we take a look at kind of what's driving the internals, this is the other part of this grid that I want to look at, and this is the SPX versus the SPX equal weight, right? SPX equal weight takes out kind of the influence of those big components, right? The ones that are most heavily weighted, the technology stocks, the Mag 7 stocks, that type of stuff, right? And you can see the correlation, right? So the SPX equal weight also driving higher. The SPX itself similarly led by typically those Mag 7 stocks, making a much stronger move. SPX equal weight a little bit more measured in this particular case. So that correlation there again is one that is pretty constant. We've seen a pretty close correlation to a one-to-one correlation. So probability trader, the most important economic data next week, perhaps, that could really move markets. In this particular case, not necessarily the leading indicators, but consumer sentiment and some of those earnings announcements. I think that's probably the biggest function of what could move the market. Now, I wanted to do one other thing. I'm going to come back here and we're going to go to our single grid. And this single grid is kind of the sandbox that I use to play around with and take a look at things. So I want to look at one other area, and that is energy and what's going on in the energy space. So really quick, let me take those ideas off of, we'll take show open interest off, we'll show contract change events. Here's crude oil. This is the crude oil futures market. And this has had an influence this week as it's kind of stalled out a little bit over the course of the last few days. But this run back towards 80, which we touched on Wednesday, was pretty amazing, right? I mean, this has been a very strong move to the upside despite demand indications. And what I thought was kind of interesting is if we were to take this diagonal downtrend line that's here, and we're just draw that down, we're above that diagonal downtrend line that's kind of been in place for the course of the last year. We've seen a rally above, and it's pulled back down to and tested. So the question is, does crude break down below this 76 range? Currently sitting at 77.45. ahead of a new presidential administration that seems to be pretty favorable towards a change in energy policy. And leading into next week, Monday is inauguration day. And so there may be a flurry of executive orders that might change this market. So again, something to pay attention to in terms of that energy space and what might be driving the markets as a whole. So as we kind of see this, I mean, this is kind of the confluence of where the economy comes home to roost. You know, one of the things that I've always kind of focused on is the idea of what does this mean, you know, in all of these kind of broad economic indicators and broad economic tools that we can use. What does this mean for me personally when I walk out the door? You know, how does this influence me? Because that's going to influence my trading. That's going to influence the perspective of my portfolio. It's going to influence the perspective of the people around me because I pay for energy, right? And I pay for food and I pay for those types of things. So one of the things that seeing this potential move to the upside suggests that, you know, we know that forces can still drive these big pulls in inventory, drawing down the crude oil inventory, drawing down natural gas inventories. That has an impact. That has an impact. And it has an impact on prices. If we take a look at natural gas as well, /NG, that's where we see, you know, this big move to the upside. And we see this kind of rocking and rolling in that space. If we take a look at /RB, this is gasoline at the pump. And so we've seen kind of a similar move here. If you fly anywhere or you heat your house with oil or you have a diesel vehicle, this one is going to be potentially important to you. HO, which is heating oil. This is the proxy also for jet fuel. This is the proxy also for diesel distillates. And so we see an enormous move to the upside, you know, kind of significant increase in volatility, significant increase in upside move in distillates this week, in heating oil, crude oil, in jet fuel, those types of things. That's going to have an impact, right? And that's going to have an impact on prices, consumer price numbers. That's going to have an impact on producer price numbers. That's going to have an impact on input costs. And it's going to weigh on things like earnings forward guidance, because those are big input costs into a lot of things. So something to pay attention to as we see this move to the upside. Is it likely that this continues at this meteoric rise? I don't know. And I don't know that from a technical analysis perspective, you know, as we're running back up into some of these resistance levels, both on crude and on natural gas and here on heating oil, that, you know, unless we see dramatic changes in policy, which we might, that this changes significantly. So, and again, that's not a recommendation. That's simply looking at what technical analysis would suggest in this particular case. So let's take a look at some of the big movers while we're here in our sandbox. One of the big movers over the course of this week was TSM, Taiwan Semiconductor. We saw a big move to the upside here in Taiwan Semiconductor off the earnings announcement, kind of gave a little bit of that back. We saw some moves in Meta, which has earnings over the horizon here. We saw a little bit of a move to the upside, but kind of coalescing into a bit of a symmetrical triangle. We saw some moves in Tesla, TSLA, as there's a lot of uncertainty swirling around this particular company and its associated characters. We see a little bit of a lift up off of that support level. That bounce started early in the week and continued and kind of bouncing up through a couple of resistance levels, maybe starting to make that double bottom on a way to perhaps a resistance level, right? And, you know, as we start to see that move to the upside, we've got an earnings announcement coming out for Tesla looking forward. And so that's going to be something potentially to pay attention to. And then one other coming off the heels of the Consumer Electronics Show, which ended up last week, NVDA, NVIDIA, which has an earnings announcement a little bit further over the horizon here. But over the course of this week, if we go back to the end of last week, we saw that downside move, and we saw another gap down into this support area around the 130 mark. And then we get these kind of piano key rallies, right? Rally up, a little bit of a pullback, rally up, a little bit of a pullback, rally up. And here we are kind of sitting right in the middle, stuck right in the middle. Now, that being said, ahead of this earnings announcement, I want to pop on here really quickly, implied volatility, IMP, implied volatility. And I want to get a sense of what's going on here with implied volatility, because this is really kind of interesting. As this has gone sideways, look at what's happened to implied volatility on this particular stock, and that's a function of the pricing of the options market. We see this kind of decrease in implied volatility going into an earnings announcement, which is really unusual. Typically, especially with NVIDIA and especially with technology stocks, we'll see a ramp up earlier than the earnings announcement and then a pretty quick crush. And we're just not even starting to see much of a ramp here yet, which means that options are inexpensive, which is one of the reasons why, if we go to the trade tab here and we take a look down here in the today's option statistics, one of the big trades that came across today was a purchaser of calls near the ask price, which is an indication generally that those are long calls and not as part of a spread. They're buying those as long calls of about 32,000 calls at the Jan 24. I think it was the 140 strike. So out here in this range here, so a little bit out of the money, and maybe a little bit of bullish speculation there. But again, not an indication or not any kind of a guarantee that there is going to be bullish movement. So some of the movers, some of the things that have been happening today, and looking forward to next week. Now, one of the things that I said as we started to look at this in terms of the Russell 2000, RUT, all right, was the possibility that we see this backing off. If rates continue to go higher, we see this backing off from that resistance level that's tested once, twice, 3 times the resistance. So I came over here to the monitor tab and I said, look, I've got a stock portfolio here. If I beta weight this to the Russell 2000, and I'll ask Brent if he'll do this for me really quickly, if he'll find a webcast in the webcast list that talks about beta weighting, because I know that he's talked about it too. But we've beta weighted this to the Russell 2000. It's sensitive to the Russell 2000 to the tune of about 124 deltas, which means it's got some pretty good exposure. Not a huge amount, but pretty good exposure. And so what I looked at doing was coming over here to the Russell 2000 and going out about 14 days to go until expiration and buying an out of the money put option on the index, cash settled index, buying an out of the money put option to provide some protection or offset if this overall market, if the Russell 2000 starts to roll over a little bit, it may buffer some of that long exposure. So I put that on earlier and I've got it down here. I'm just going to move that to this group so that we can see the impact. So I'm going to move it to my stocks group, and we're going to come up here. We're going to see, all right, now we've got that Russell 2000 and we've reduced our exposure in this portfolio by about 35 deltas, meaning we've taken that long exposure that was 125 deltas, we reduced it down to about 89 or 90 deltas, buffered that a little bit. Still has some long exposure, but we've buffered some downside potential there with a long Russell index put option. By the way, if you want to learn more about how to trade those index options and some strategies, check out my index options webcast, 11 a.m. Eastern time on Wednesday mornings. But guys, man, this time goes fast. Make sure you click on that subscribe button there at the bottom of the page. Make sure that you follow me, you follow Brent and all of our coaches on X, at Ben Watson CS, at Brent Moores CS. We talked a little bit about what's going on next week. We talked a little bit about the possibility of what's happening in the market, but we'd love to have you check out our schwab.com/coaching site as well for more information. And guys, I'm just going to sign off this way, the same way that I did with the Wall Street wrap-up years and years and years ago, and I'll explain it. Some of you already know the explanation, but keep your arms and hands inside the ride at all times. Hang on and have fun, and we'll see you all next week. Have a great long weekend, everybody. Take care. Bye-bye.